Hi everyone. Getting towards the end of August now, and I've had a bit of a break from trading, school holidays and the such, and it's been quite nice to have a break. Although August doesn't look like it's been a particularly bad month to trade, like it can sometimes be. Certainly on the pound dollar last few years. Anyway, I did make a post about trend trading idea that I've been working on, and I've tried quite a few trend trading ideas in the past, and it's something that's kind of been interesting me over the last few months, and that I've been working on because I think it's good to have some sort of diversification in the way that you trade. And purely just for I like the process of trying to develop systems, but anyway, I posted a brief outline of it the other day in my thread, and it's really basic and really simple, and when you look at it you think, no, something like that's just not going to make money, but it performs surprisingly well. And the most interesting part about it is it's how the decision to whether you're in an uptrend or a downtrend is so, it feels very much like a coin flip, but it works surprisingly well. And something I've always struggled with is trying to get moving averages to work, and I traded with them for a long time in the past, and they were never sort of satisfactory. So the idea for direction changes is interesting for a start. The entry is pretty much similar to all of my systems. Really it's a case of buying when price is going up, selling when price is going down, and not really taking any notice of candle stick patterns as such. Exit wise, let me just run through the basic rules, so we can expand on it a bit more then. Okay, so to get the direction of the trend, you look at the previous days. This is a 30-minute chart. Okay, I've developed this for 30-minute charts, and I'll sort of go into some detail about that later, but obviously you could expand this out to different time frames, but this one itself has been built around the 30-minute chart, and that's mainly for reasons to do with risk to reward. Okay, I'm sure you could do something on daily, but I'd have to kind of perhaps tweak the exit rules and the trend rules. But anyway, what you do is you look at the previous day. Here's the previous day's open. Here's the previous day's close. Okay, price closed up yesterday. So on the following day, we are going to look to just trade long. Okay, so that is our direction set for the day. So we come to our next day, and our direction is set as long. Here is the start of London trading. So we're just looking for a bar to close bullish. We put a buy over the high, we put a stop at the low, and we risk a fixed fractional amount of our account. So for demonstration purposes, let's say 1% of our account. Okay, and you can see we don't trigger our long, and the next bar closes down, so we cancel this order. Then we get another bar close up, and we repeat the process. It gets cancelled again. Both of these get cancelled when the bar closes down, and again, and then eventually here we get a long trade trigger. Okay, now we're in this trade, and what we want to do is aim for a larger risk to reward. Okay, and I've got some interesting ideas about trailing, but for demonstration purposes, just so you can get the gist of it, let's say we're going to go for 4-to-1 risk to reward. Okay, so essentially you want to hit 2 winners out of every 10 trades as a minimum. Okay, surprisingly, if you only hit 3 out of every 10, you do really well, because you'll do 100 trades quickly, and you do the math. And okay, so as you can see, we enter long here, and this one does go up and hit our 4-to-1 risk to reward. Okay, and now the next day we can see we opened here and we closed here. Okay, now if a day closes flat, completely flat, you can't tell whether it was up or down, then you go based on the previous day. Okay, previous day was up, so this next day we're just going to look for longs again. And that is the core of the system. Now there is one other element I want to talk about. If let me find an example where it occurs. Okay, let's imagine we were trading long on this day. Okay, and we took our first trade here. Okay, if your first trade breaks out and makes a new swing high, okay, takes out these swings, and then pulls back, you can add a second trade. Okay, this one you can be a bit more aggressive with, like a trailing stop. Okay, so these don't happen very often. If your first trade kind of meanders a little bit and crawls up, you don't really want to do it. But if you enter your first trade and you get a strong push and a pullback, then these are good setups to add a second trade. So that's a little variation. You don't actually need to do that, but when you get a nice trending environment, it actually is really good for sort of boosting your profits. So it's kind of something you don't have to necessarily do at first, but it's something you can look at adding as you go on if you want to kind of give it a bit more of an edge. So that is it, really simple. And you think, well, that's never going to make any money, it's too simple, it's just not going to work. So that's just a little example. Let's just run through August. We've just had August. Let's have a little run through and see what you would have done. So 31st of July, price closed up. So we were just looking for longs on the 1st of August. Okay. This was our first trade here. Did it actually? No. Okay. So this trade went for to 3-to-1. It came back and stopped us out. So that's -1. Here's our second trade long here, and you can see this one clearly went to 4-to-1. So we're 3R up at the end of the first day. Okay. You can see price closed down for the day. So on this next day we're just looking for short trades. Okay, and we're plus 3R. Here's our first short trade for the day, and we can see this one, you can't probably see, but it does go down to 4-to-1 risk to reward on the next day. Okay, so now we are 7-to-1. This day closed up, so we're only looking for longs. And here's our first long, it stops out. Now we're 6R. Second long, that stops out, we're 5R. Third long, that stops out, we're 4R, and that's the end of the day. So now we're 4R up. Close down for the day, just looking for shorts. Here's our first short here. that stops out. Now we're 3R up, and here's our next short, and this one goes to 4R, so we are 7R up again. Okay, price closed down for the day. We're looking for shorts. Okay, this was our first short here, and not until late the next day this one hits 4R. Okay, so now we are 11R up. Should write this down because no doubt I'm going to get myself lost here.